Thank you for tuning in to another edition of the Vulcan Report. This report is for trading on February the 24th, Wednesday. Right now you can see that the market is moving rather nicely on this weekly silver futures chart. Currently we're trading at 15.54.9. As you recall from last video, we were down in here trading below this line here. We broke out above this initial white dot resistance and we've been climbing ever since. It should be noted that the gold and silver prices right now, those two markets are trading better percentage wise for 2016 than stocks. So the gold and silver is up 10% and the stock market's down 10%. So there you have it. The metals are now outperforming the stock market. It should be also noted that we pulled back to this blue support line and we held it. We spike tested it and we rallied back up. We're still trading within the overall band here from this bar, this last bar from February the 8th. A breakout above this would put this silver into new highs, which is what we want. 1624 is our high print in the May contract. We've now switched over. Last trade day for long positions in the March silver futures contract is Thursday, so I went ahead and rolled over, and you probably want to do the same. So here you go. Here, this is nice momentum. You can see the open interest and volume picking up here. Should be more than enough to push this up into the 17 handle within the next 10 days. So we'll see how we do there in the silver futures contract. Let's switch on over now to the gold. Gold is setting at 1264.4 right now. We hit a high of 1247 so far this morning, and we're making a run for that. So the 1264.4 high is in play. We should be able to take that out hopefully by Friday, by the close of Friday, and within the next 10 days we should be knocking at the door of 1300 in the gold. So that's what we're looking at right now. Beautiful move as we broke out here. Just a gorgeous move from that breakout. That's what you want to see. As you can see, we've broken out of the Kumo cloud. The trend line supports are turning up. This blue line here is going to be exiting the cloud soon. Then these two will be following right behind it, and we will really see an impact once the trend lines can get outside and above the Kumo cloud as well. So for the aggressive signals back here, they were beautiful. Those of you who are still waiting on confirmation, so be it. But I like the aggressive plays better with tight manageable stops, and if you get stopped out you can always get back in again. That way you don't miss a bulk of the move. Waiting to the trend lines to get out, you'll get you can get in the move somewhere around here, but if we get a breakaway gaps and the market just runs, then you'll miss all of that waiting for these confirmations here. And unless you're a big bank or some kind of large fund, probably won't do you any good to do that anyway. Alright, moving on now to crude oil. Let's see here. As you can see, just like I warned before, crude oil is in a steady downtrend. We hit 26.05 for a new 52-week low, and the market has since bounced a little bit from there. From 26.05 we bounced up to $34.20. So that's a nice bounce. That is a very powerful bounce. You're looking at an $8 bounce. It is not outside of the norm for crude oil to have 10-point trading ranges, up or down. I've seen it do it in a day, so it can happen. But the trend line's still right here, and it's nice and intact. It's just there. But we do need to keep an eye out for geopolitical events, excuse me, that have nothing to do with the market, but it could cause people to react within the market. So right now we have an emergency watch at $36.51. This white dot right here. If we take that out and or close above it, then the 46.51 handle trendline resistance will become in play. Then we'll get inside the Kumo cloud and we'll see if we just come back down and form a new resistance, a new leg down or not. But we gotta watch it. I don't think so. I think the market wants to head lower. I think we're gonna go and test that long-term $15 support, which is a very strong support, and we may very well test it, probably with a spike low intraday. But that's where we're going to stay. I think we're going to be within that $15 to $30 range again for the foreseeable future, just like we were in the 90s and in early 2000. We traded within $15 to $30 period. The market really didn't do anything outside of those parameters, so we'll keep an eye out for that. Alright, taking it here now, looking at the S&P 500. Just so you know, these support spikes don't necessarily mean that that's a strong support. Alright, the reason I say that is because my earlier videos warned about this support back here, stating that if it's taken out, then the market's in trouble. Well, it took it out, and it did it twice on a spike low basis. Spike lows do not necessarily represent support and resistance in a market. They're just spikes. Normally the markets like to go back and test those. They also usually show where the market is extremely fragile. I like to call spike bars glass ceilings and glass floors. Markets love to crash below them. So once again, if we close below these spike lows, the market is in trouble. It's in terrible trouble. Take your spike, this one, this one, this one, or this one, doesn't matter. A close below any one of those and this market is in trouble. I don't see a support. Like I said before, I'm going to stand by my earlier videos. I don't see support in this market. I see no support once we close below that. That means the sky's the limit, meaning that we can go back down to the 666 low of March 2009. We could do it. There's nothing to say that we can't. You look at all the geopolitical situations, the global economic situations, and it all adds up. Just, do a Google search and you'll see what I'm talking about. Alright, and last but not least, let's take a look at the dollar. Alright. The dollar is testing the long-term trend line support. Spike low test here. Spike low test here. Beautiful test there. Spike test here, but broke below it. Rally back up now. Now we're bumping up against this short-term support line, which is now acting like a resistance line. If we can't break and close above it, then we're going to end up closing below the long-term trend line's support and finding ourselves inside that Kumo cloud, which we will be in jeopardy and in danger of closing outside below it. So this market right now, in order to put an end to this short-term correction or a pullback, if you will, I really wouldn't call it a correction. I call it a pullback because we're still good. The trend lines are still sharp. As long as this short-term trend line doesn't cross below this orange one, we're good to go. Prices can jump around all they want, but as long as these trend lines remain intact, you're good. Alright, so right now, in order to say that the downtrend corrective situation is done, we're going to need to get above 99.98. So in other words, this market really needs to get back to par. It keeps testing par. We tested it here, we tested it here, and then it never can hold it. It always cracks back down again. This market, if it's going to really show signs of power and show that the dollar is still the world's safe haven, the world's reserve currency, if it's going to fight for dominance, it needs to close above par, and it really needs to get back up to like the 101. I'll throw the rock out there and say we need to see closes above 105 and 106 and 107, and we really need to see 101 be the floor. We need to see 101 become the new support for the U.S. dollar. Then we can truly say that the U.S. dollar is the world reserve currency. To my knowledge, if I remember correctly, I think at one point in time we were even above 200. So we need to get strong again. This dollar needs to get strong. I don't see any economic forces to dictate what I'm saying. I'm just talking about technicals and trading on the charts. That's it. Doesn't need to make sense. It just needs to have price action, and that's where the price action needs to go to prevent this dollar from utterly collapsing and crashing. I'll end the video with this. It does look, in my opinion, based on the way this chart is looking right now, if I was long this dollar, I would be very concerned right now. Extremely concerned right now. Especially with gold and silver powering up the way they are. I would be very, very concerned. If I was long oil or long the dollar, or long the stock market, I would be concerned. I'm telling you, very concerned. You need to think about maybe taking some long money off the table if you're long the dollar, or if you were long that oil. You better think twice and get the heck out of the market and start thinking about setting up your short tickets for the dollar, the oil, and the stock market like the S&P and the Dow. I'm just saying. I will put up the Pandora spreadsheet on the blog, and some other things that I covered in this video with all the technicals and what we're looking at, support, resistance, and all that good stuff. All right, so remember, take what you can, give nothing back.